Hello, this is Scott Wenzel from Wenzel Wealth Management, and welcome to our quarterly review for the second quarter of 2018. The U.S. markets had a fairly good quarter. It was mainly a sideways market, but ended the quarter up 3.89%. Smaller stocks actually contributed quite a bit to that, so the U.S. markets were up. Non-U.S. markets were down. We had international developed markets down 0.75. And emerging markets had a tough quarter, down 7.96%. You can see global REITs actually had a good quarter, up over 6%. And over on the bond side, U.S. bonds down slightly as rates went up. And then global bonds actually had a positive quarter, up 0.48%. And just looking at the events of the quarter and the chart of the quarter, you can see again it was sort of a sideways market. The economy is strong, so we had a number of good, sort of economic, reports and things for the economy in the second quarter. So it's good that the fundamentals are actually catching up with, the markets. So I think that's actually healthy. Unemployment remains incredibly low. We actually have more job openings than people who are looking for jobs right now. So that's a really unusual case and a sign of a very strong economy. Other good things that happened or things that kind of show the economy is gaining, pretty strong is yields are going up. So yield on the 10-year note actually hit 3% during the quarter and backed off slightly, but rates continued to rise. Oil prices are recovering as well, so oil prices were up for the quarter. And then, the big news really for the quarter was, the trade, trade issues and trade news and, talk of tariffs and different things like that. So that certainly was a concern, but, it's kept a lid on the market, and I actually think hurt emerging markets quite a bit as well. So the trade was really probably the biggest news item for the quarter. Just looking a little deeper at U.S. stocks, as I mentioned, small company stocks did well. So you can see, all the different types of small cap stocks were up over 7% for the quarter. So strong showing there. A lot of the reasoning is smaller companies are more exposed to just the domestic market. So not as exposed to the tariff situation and all those issues. Growth stocks continued to outpace value stocks. So you can see growth-oriented companies up over 5%. That'd be technology and healthcare, and those have been really two leading sectors in the market, this year and last year as well. So they continue to do well for the quarter. So overall, a good quarter for U.S. stocks. Looking at international developed stocks, you can see slight declines when you look at them in U.S. currency. I think the interesting thing to note is when you look in local currency, you can see, modest gains. So large cap international up over 3.76 in local currency terms, but down 0.75 in U.S. currency. So really just reflecting the fact that the dollar was strong in the second quarter of 2018. Looking at emerging markets, you can see in local currency they had declines, and then that was made worse by the rally in the dollar. So you can see declines in the emerging markets of over 7% for the quarter. So again, the dollar, strong dollar, and then worries about sort of the trade situation actually impacted emerging markets, negatively most of all, markets in the world. Just looking at individual country performance, you can see on the developed market side, bit of a mixed bag, but you can see, Norway being strong with oil prices doing well. Canada and Australia as well had pretty good quarters, more resource-oriented economies as well. Singapore actually is sort of a noteworthy one that had a negative quarter. You can see other major economies, Japan and Germany, kind of falling more in line with the averages there for the quarter. Over on the emerging market side, you can see actually most markets declined. We can find China, and here's, you can see how China didn't do quite as bad, down 3.25. So India as well actually hung in there relatively well. Brazil and Turkey were certainly the worst performing markets, and those are, fairly major emerging market economies. So very poor performance for those. Looking at the currencies, you can see pretty much every currency depreciated against the dollar. The Hong Kong dollar was the only thing to show a gain. Looking just sort of at major developed market currencies, Canadian dollar was held up fairly well, but you can see the yen here and the euro had pretty significant declines for the quarter. And then over on the emerging market side, fairly big declines across the board. Here's the Chinese yuan. So as part of sort of the tariff situation, letting their currency devalue against the dollar is sort of part of all of that, all the politics involved. So the yuan actually depreciated quite a bit for the quarter. Looking at commodities, oil, as I mentioned, had a fairly strong quarter. So you can see Brent crude and West Texas crude up 12 and 16% respectively. On the downside, some of the grains showed declines, and that's partly from the trade discussion, but really because we've just had excellent growing season here in the U.S. and plenty of rain, and the crops are doing really well. So I think expectations of a bumper crop hurt grain prices there. And last, looking at interest rates, the yield curve continued to flatten, with the one-year Treasury bill increasing 24 basis points up to a yield of 2.33. The two-year note is up to 2.52, increasing 25 basis points. The 10-year note was up 11 basis points to a yield of 2.85. So just a continued flattening of the yield curve. You can see in the graph, sort of small changes for the quarter, but a pretty big change for the one-year period, reflecting the stronger economy and the fact that the Federal Reserve is raising interest rates. So for the quarter, most bond markets had slightly positive returns, so they were able to sort of absorb the smaller rate increases and provide some positive returns this quarter. So that wraps up the market update for the second quarter of 2018. Again, this is Scott Wenzel of Wenzel Wealth Management, and if you have any questions, feel free to reach out and contact me. Thank you.